Looks like we're having some audio issues out there. Anybody out there, can you guys hear me? I saw a couple of comments in there. Let me know if you can hear me coming through, and we'll pick this up here. I apologize if anybody out there couldn't hear me. Perhaps some of you could. Just drop it. Okay, Becky says she can hear Centerfield. Okay. Only on Facebook. Okay, interesting. All right, some audio issues happening. Sophia's saying still unable to hear audio, which is interesting. Some of you guys can hear me. Some of you guys cannot. Cannot on YouTube. It's showing my YouTube channel is connected properly, so I apologize, guys, for that happening here. Not sure what that is. I will definitely look into that. Hopefully, you guys are able to switch over to Facebook if you can't hear me. Everything's looking good on this end, so we'll have to look into that. Just a quick recap for anybody who could not hear me. This is what it's coming down to. Today, this is a special episode, and it really is because today, the S&P convincingly closing in bear market territory. Why does that matter for us? It's not just a term. It's not just some general thing that happens in the market, and we look forward to the recessionary conditions we might have down the road. What it means is, if you have any stock exposure, your IRA, your Roth IRA, any kind of retirement vehicle, your 403B, 401k, all kinds of stuff. I know we got folks on here with lots of different kinds of retirement accounts, self-directed or otherwise. Okay, you're seeing a significant drawdown in that account, no doubt. Now, I know this in most cases, unless there's already a plan in place to protect your money, right? Some kind of capital preservation plan, whether it be hedging or cash. I'm going to talk about a few of those tonight. You're seeing some pretty big drops. I personally have sat with almost a dozen people in the last 3.5 days, okay, traveling around the country. And I know that the markets are down and it's dragging down a lot of portfolios. Even if there's a variation in those portfolios, we're seeing a lot of drawdown. I can see some people there commenting now. You can hear me on YouTube, so that's good to know. So I want to dive into that tonight. All right, we want to talk about something that ultimately has the potential to save you a lot of money. Actually, even looking at some of what we do here at Tradeway, which our long-term program here at Tradeway. Okay, we teach people how to actively trade in the stock market. Actively getting in and out of the market as swing traders, 2 days to 2 weeks. Right now, a lot of I can't say that word tonight. A lot of volatility out there, and that means we're not really staying in positions very long. These are pretty fast trades right now. I'll show you some paper trades that we've been putting on with some of our students as well tonight. But main focus here, I got that long-term money last year, 25%. Being returned on the S&P 500. If I didn't have mutual funds and I wasn't paying all those fees and management fees and all the kinds of stuff that comes along with that, and I just owned an ETF similar to or as the SPY, S&P Index Fund, for an example, no management fees on that, 25% approximately. So I would have returned last year. Okay, but down 20%. This year so far, actually just over now, 20%. So it's not just what we bring in, it's what we hold on to, right? Not just what we make, but what we keep. Of course, that's very important, very important. I've had to, see that play out in time. You can make money in a trade, but you got to hold on to it. Well, what about that long-term money? We got some folks here at Tradeway on the coaching team, right? They tell this testimony public all the time in terms of why they started trading. Right? Why they started trading and having lost in 2000, significant bear market crash, and then 2008, the prevalent doctrine, I like to say, for many financial advisors, I know this because I talk to the people. Now, I'm not demonizing anybody tonight, right? But I'm saying normally what happens is your money gets left in the market all the way to the bottom of the bear market. And things like you can't time the market. It's not worth it, right? Charting is a myth. and so on. So, Danny, you got to just leave it in. We got to just ride out the storm, right? Well, here at Tradeway, we don't leave it in all the way down. Danny said, do you guys have an index fund? We do not. No, we do not have an index fund. But the S&P 500 has a very liquid, very popular index fund as an example of how people can track the market, right, in their portfolio. And getting away from the mutual fund products that are sold to us with all the fees and things that are associated with those, when we could actually just do this very simply in our own brokerage accounts, right? But we also need to understand how to protect long-term money. Now, this may not have come through earlier based on our audio issues, but I've definitely spoken to a lot of people recently who are seeing those drawdowns, and certainly fear is rising. And that's the thing in the markets. We say this on Market Monday, fear moves faster than greed. Fear moves faster than greed. Once the market really starts to bail out, I don't think we're in a panic mode, okay? As in terms of Wall Street in general, okay? Here at Tradeway, we're not in a panic mode at all. It's just another day at the office. And I don't say that cocky. I mean, the markets move up and the markets move down, right? We've been expecting something like this for some time now. Certainly, well, Ken, I got to say, Ken, your comment kind of came at the appropriate moment, simply to say that, you know, we've been seeing in the economy for some time now, almost exactly since the inauguration, we started to see prices rising. We have the most unpopular president in 40 years, all right, in terms of recent polls. So there's just a lot of things happening in the way our economy is being run right now, to put it plainly, that is creating a lot of headwinds. And the market is just starting to reflect that. Remember, the stock market is what we call a leading indicator. Wall Street is always scouring over the data. How are companies doing? How is employment? How is GDP? What about interest rates? All kinds of factors. You and I don't need to understand all of that. But we can understand that because Wall Street is always looking at that stuff, they buy and sell. They price things into the market very quickly. So we start to see the market really moving down quickly. It's not just happening just because. It's because their confidence in where we are going is vanishing. Honestly, it is. It's leaving the market. They're looking for safer places to put their money because they're not seeing our economy growing. Now, it's not to say that we're going to see it go down. And as I'm talking about this, let's go ahead and actually just put the S&P up on the chart in front of us so we can see. SPX is a ticker. So we can see what's happening as I'm talking about it. We're at an interesting point here for sure. Getting into that old resistance there as potential new support. You can see that horizontal line right across to the top of today's candlestick. That's our bear market territory. That was about 20% from the high. Karen says, what goes up must come down. It's all about cycles. You know, I love that you said that, Karen, because the reality is a lot of us didn't ever know that the economy moves in cycles. See, if we don't know that, then there's an anxiety around bear markets. Now, at Tradeway, we're not hoping for recessions, right? We don't want economic downturns. We want the country to thrive. We want that. But as Karen points out, we know there are economic downturns. This is part of the cycle. It's like we have summer, but we're going to have winter. And the economy has summer and has winter. Interestingly enough, though, the more we try to manipulate that and end up like the Beach Boys, right? The endless summer, potentially the longer the winter could be. And that's kind of what we're looking at in Wall Street right now, which is why I want to help you guys understand where we're at and some of the things you can do. And I'll give you some information at the end of this broadcast. If you're interested in having one of our coaches look at your long-term money and get a plan together for you, help you understand some of the things that we do differently here at Tradeway. Not only some active strategies to protect what you have made in this hot bull market run we've had now for some time, but also even looking at some ways that we can promote that capital in an economic downturn. Okay, it's different for everybody. Everybody has different objectives, different goals at different places in life. So generally speaking, obviously I'm speaking to a broad audience tonight, but that is really what we do. I see some great questions in the chat, so I'm going to jump into that in a second here. First, I just want to say hi to everybody, and then we'll get a little bit deeper into what's happening in the market after another big day down today. Now, Joseph said at the beginning here, what's happening today? That's possible that was regarding the audio, Joseph. So I don't know for sure if that's what that was. But as far as what happened today, I mean, look at this, guys. Here's the 8 days we went sideways, right? Into bear market territory here, popped out, right? Couldn't hold it. Not enough negativity. Okay. It pops out, moves up, nice rip higher. We would expect this. We still expect this in bear markets. Remember, in bear markets, the market doesn't go down every day forever. We see some big moves down. We have not entered into what we would refer to as a panic part of the cycle, right? Where the market really capitulates to a significant move down, where we might see something, and I'm speculating here, guys. We don't know. But consider how much this market has been artificially propped up. I'm going to go to a 3-year weekly chart here. Look at how this is COVID right here, guys. And you guys have heard me talk about this lots on Market Monday. I'm not going to spend a lot of time on this for the sake of those who've heard this a few times. But, before COVID, if you remember, we had one of the strongest economies we have ever had. I'm not even trying to make a political statement here, guys. The reality just is when it comes to jobs, when it comes to wages, when it comes to growth, when it comes to the stock market, we were doing extremely well, okay? Extremely well. Obviously, we know COVID hit and we had to shut down the economy. How they handled that, how they didn't handle that is a conversation, a debate for another time. But we know that they closed everything down. We saw a huge drop very fast. Each one of these candlesticks, FYI, is a week long, right? We're not looking at a daily time frame here. We're looking at a weekly time frame. It crashes down, and look at this. And I'm going to go over to here, right? Not even, this is now August 2020. Over here, we're looking at November 2020. So even August, right? August, from end of March, April-ish, into August, we recovered all the way back to where we were pre-COVID. And then we absolutely blasted off from there. Cheap money. That was the big thing. Printing money, Fed buying assets, the government spending billions of dollars, buying assets, releasing money into the economy, zero or near zero interest rates, making it very cheap to borrow money, meant that there were a lot of stimulus efforts coming from the government. To do what? To make the economy run hot. Well, we went a little overboard, you could say, right? You can't just print money and put everything on the credit card, so to speak. Eventually, you're going to get a pretty big bill in the mail. Inflation, anybody? Right? Anybody out there spending a whole lot more money on things than you used to? Obviously, gas being the big one for all of us, oil and gas. Inflation is a tax. It's essentially a tax. We are going to pay for the things that we do. Meaning, and I mean monetarily, we're going to pay. If we print money, if we spend, right? It's going to come back. That has to come from somewhere, and it's created tremendous issues. Now, there's lots of other things with supply lines and things like that we could talk about. We've covered a lot in the past. But all this to say, the economy just continued to move higher and higher and higher. And historically, you've heard me say this on here on Market Monday before, anytime we've had these employment numbers with this kind of inflation, anything above 4%, we got an inflation reading on Friday. It's almost 9%. It's actually gone up even higher. We've always gone into a recession within 2 years, okay? So that all to lay a foundation for us to say, we've been expecting something like this for a while, but I don't think we're really even seeing it get real nasty yet, right? It's still kind of holding on. Now, the federal bank is going to report on Wednesday for you traders out there. Make sure you remember Federal Bank on Wednesday. That's going to be a meeting where they're expected to raise rates again. Will they raise them higher? Will they not? Again, we had that inflation reading on Friday. So we might see them be more aggressive. And the market is speculating and preparing for that. And they're doing so by selling off, putting us, as I said, convincingly into the bear market territory. Let me get back to this chart here, looking at a daily chart. And I'm going to answer some questions. And I want to give you a couple of things that are important to know when it comes to your long-term money, right? Especially if you guys are in those high-flying tech stocks, right? If you're in a lot of tech stocks right now, no doubt you've seen a pretty significant drawdown in your portfolio based on the fact that the NASDAQ has been in a bear market now for some time. What we're looking at here is the SPX, right? The S&P 500, 500 growth companies across 11 sectors in the economy. This is down 20% plus today, but the NASDAQ, a lot of those tech stocks, man, they're down. You know what? I'm even going to show you. Look at some of this stuff, you guys. Let's just go to some of these big boys, right? Now, Amazon just recently split. So this chart is adjusted for splits here. We topped out around $190. Amazon down to $100 today, hitting that low around $100, right? We've hit a few times. If I zoom in here, you'll notice 1, 2, 3 times right there at that bottom level, right? Wouldn't be surprised if we see a little bit of a bounce here at this level. We'd have to see the buyers come in and prove that to us, but we might be able to see that coming in here. But the point I have is, that means Amazon, not quite, but almost down about 50%. Now, hold on a second. Amazon? Isn't Amazon a good company? Sure it is. But there's a huge sell-off, right? Highs near 190, so down 103 right now. So not 50%, but pushing close, right? Pushing close. Some other big companies out there. Disney, right? Disney stock, regardless of what we might say politically about Disney, Disney company, this is a juggernaut of a company, right? They make a lot of money. High of $200 a share back here in March of 21, right? Now down $95, right? Now, part of this is that these stocks just went absolutely ballistic. I mean, the market just pushed to very extreme highs. These evaluations just weren't sustainable. And you can see Disney's been moving down for some time. But even back here, guys, this is close to 190 in September of last year, right? Over here, I'm looking at 180 in November. And since November, 180 to 95, almost, again, losing almost 50% there. So stocks are moving down. What's my point? I think we got a lot further to go. Now, of course, I'm speculating here. We don't guess. We don't gamble. We don't go for it here at Tradeway. That's not how we trade. That's not how we long-term invest. And by the way, just to be clear, I'm not suggesting everybody out there just go and take all your money out of your retirement account right now, right? There's some nuances and some things we would have to look at with each individual. But with the potential for things to go down considerably lower from here, right? We've got to have some ways to protect our money, okay? Danny's saying, is it a good time to enter the market? Now, I'm going to assume something because we teach stocks. We also teach options trading. So options are something that we can use in a multitude of different ways, right? Even if you don't know what an option is, I'll just explain quickly. When you buy a stock, you want to buy low and sell high. Simple as that, right? We're not shorting stock. We're just buying it. If you go out, you buy a stock, you want to buy it at $5 a share and sell it at $10 a share, right? Put nice and easy. You want to buy it low. You want to sell it for a profit. It's as simple as that. That means you have to see the stock move up. Well, in options, that's not the case, right? The way an option works, or what we call a derivative, it derives its value from the stock. You don't buy the stock. You buy the option. Now, we teach on options in our program, and I've actually done a preview of options multiple times right here on this channel earlier this year. Remember, you can always go back, Market Monday on YouTube. That's where they're all located, on YouTube. On Facebook, you're going to have to do some pretty significant scrolling to find that, I think. So you can just go to YouTube and watch them there on Tradeway's channel. But but we did some options previews. So I highly recommend looking at that if you don't know options, because right now in the market, not great for stock trading, right? In fact, it's not good for stock trading at all. Why? Because it's dropping considerably, right? Very volatile. They are not feeling confident. If you notice right here where we closed around 4,100, we've lost a lot of value in just 3 days, right? Just in 3 days, because currently we're at 3750, right? So it's a pretty big drop on the S&P in 3 days. Today, 4%. Now, think about this. If you only owned an S&P index fund, which mutual funds, index portfolios, big banks, the way that they measure and gauge performance is against the market, right? What have they returned in comparison to the market? Did they outperform the market? Did they underperform the market? Last year, about 25% is what the S&P returned. If you had just bought the S&P and set it and forget it, you'd return about 25% on the year. 25% in 1 year is pretty darn good in the stock market for stocks on long-term money, right? There's some real high-flying tech stocks out there. No question the tech industry went bananas, probably a lot bigger than that. I don't actually know offhand what the 2021 return on the NASDAQ was. To be a quick Google, very easy to do. But point being, today, the market alone, 3.88%. It's about 4% in the market just today. Just today. And we've had multiple massive days down lately. So is it a good time to buy? No, it's not a good time to buy. I will say this. As we are moving into deeper bear market conditions, what can you expect? Well, probably more fear, right? Fear in the news, fear in the market, more volatility. Now, this is important to your question, because I'm not saying the market's going to go down every day. And part of what can happen in this environment is that you'll notice, if I zoom in here, especially traders, these rips higher, this will go down. Eventually, we'll get a bounce. They will buy in and start to buy some stocks. This is where the trap can be, however, because when things get really bad, Wall Street will come in and they will buy stocks. They may even buy stocks a couple of days in a row and send the market up considerably. It went down 150 points today. I won't be surprised if in the next little while we see it go up 150, 175 points in a single day, which, by the way, is massive. Massive. Now, what that does to amateurs is it makes us go, oh, I'm going to get in the market because it's up. And that's exactly when they get off the train and we get stuck, as they say, holding the bag. So we need to make sure, whether it's long-term or short-term, which is two different skill sets, trading versus investing, that we don't get caught in that trap. Okay. We need to have a good system that tells us how to manage risk, when to get in, when to get out. You can always head over to tradeway.com. I'm teaching a step 1 coming up in about 3 weeks on tradeway.com right there. You can go there, you can sign up. Trust me, if you don't know anything about stocks right now, it's going to be the best $100 you ever spent, because we're going to go over the system we use to choose when to buy and sell, which also means when not to buy and sell. Right now, you're going to take a tremendous amount of risk. You're going to take a tremendous amount of risk trying to trade this market right now. The old saying is, don't try to catch a falling knife. Don't try to catch a falling knife. What do? You step back and you let it hit the floor, right? Let the knife hit the floor, let it stabilize. Then you can go in and consider picking that up, right? I'm not saying evaluations on some of these stocks aren't cheap in some ways, but I am saying there is a very legitimate expectation that we could see considerably further to go on the downside. Ken is saying, bring back the mean tweeter and cheap gas station prices. Right. I think we're all paying about double. Right. We're all paying about double. Actually, oil and gas, quickly, let's just throw this in here. Oil and gas, if we look at the energy sector today, oil and gas finally having a pullback, meaning starting to get a little bit of a pullback. But if you learn how to read these moving averages, boom, this guy came right down into that 50-day moving average. We saw some energy stocks catch a nice bounce. This has been one of the industries we have been willing to look at occasionally for stock trades because it's been so hot. It's benefiting from that inflation. It's not so much getting killed, as you can see, This is moving up from bottom left of the chart to top right. That's what we want to see when we're stock buyers. Okay. I'm just looking at the price. Is it moving up overall? Okay. Then I can start to identify patterns within that movement, and that gives me some buying and selling signals. I don't have to guess. I don't have to know the future to buy stocks like a trader, right? I can use the system, and that's what we do. Part of that is those moving averages, and this guy hitting that 50-day today. Little early to tell where we're going. We might have another big day down here. Again, we've got the Fed coming in. So with that said, let's go back to the S&P. A couple things I want to share with you guys. First of all, I'm going to pull this guy up so I can give this to y'all. Okay. I'm going to put this in the chat for everybody as I'm going here. This is a free Zoom we've got coming up. Okay. So our long-term program, Amped, it's called Amped, where we are helping folks understand how we use our skills in stock trading to be able to protect and even promote our long-term money, right? Because we can take advantage of that down movement. We just have to do it in a smart way. We have to understand your objectives, your goals, your risk tolerance, your age, things like that. So that's an individual thing. You can come and get so much more information at no obligation to you if you join that Zoom link that I set in there. We got that coming up. I posted that there for Facebook and YouTube. Let me know if you guys have any questions about that. If you don't see that coming through, it shows me on my end that it is there. So what is a little bit of what we might look at doing? Well, I mentioned at the top of the broadcast, I've been meeting people, and God bless them. This is why it's important to learn the skill set. This is why it's important we live in one of the greatest countries, if not the greatest country in the world ever for financial opportunity, okay? But we also have a very high amount of financial illiteracy. I don't blame anyone here on this webinar if you feel like maybe that's you. That was definitely me. Probably worse than anybody on this webinar. So listen, I'm talking to myself here. But the illiteracy means I pay somebody else, they manage my account, I don't know what they do, I don't know when they're going to communicate with me, I don't even know what I'm in. I'm in the market, but I don't even know what I'm in. I have a lot of people who will come to me and say, Blair, I'd like you to sit down, look at this long-term money I have, because I don't even know what I'm in. If I ask them, they're going to tell me right away, I don't know. I don't know what questions to ask. Here's my number one question that I give people when you have a financial advisor. And I'll say again, I'm not demonizing anybody, right? There are great financial advisors out there, right? There are, but there are just so many that don't understand that we just don't have to leave stocks in all the way down to the bottom. Would you like to give back 25, 35, 45 plus % of your money, where it takes a lot of time away from you losing that money, but then also a lot of time making it back if the market that you're in recovers, right? The market as a whole will recover. It always has, and there's a very high likelihood that it will, but it's going to take some time. That's a significant opportunity and time cost that is not necessary. We at Tradeway, we don't think that we can perfectly time the top and perfectly time the bottom of the market, but we don't need to do that to be reasonably protective regarding our assets. And that is one thing we can do. We could actually move some or all of our money into a cash or cash equivalent. We don't actually have to be in the market in these conditions. There is the potential that we can miss a little bit of recovery. We could get out a little bit early, we could get out a little bit late. Those things could happen if you're doing it on your own. You don't have to do this on your own. I popped that link into the chat so you can meet with our guys who help you understand how this works for us. Now, that said, that's only one idea, right? We also teach put options, okay? Put options are something that actually increases in value, right? You and I make money in a put option as a buyer of a put option when the stock moves down. So if I'm in Amazon and I buy put options on Amazon and the stock goes down, the stock is losing value, but the put option is gaining in value. And that's exactly why options were designed. The initial design, we use them in all kinds of interesting ways as traders now, But the original way they were designed is to hedge. It's an insurance contract on stock where you can actually insure your portfolio, where you say, I don't want to get out of a specific stock. I'm going to buy some insurance on that stock. And as the market drops, the puts gain value. You say, yeah, Blair, but I'm losing money on my shares. True, but you're gaining, if they're dropping, you're gaining on the puts and you're moving towards a net zero movement, right? That's what insurance is for. You get in a car accident, it still damages the vehicle, but it's covered, right? It's covered. And there's more we can get into in our courses on how to really use options and buy insurance and things like that. But understanding that the market is actually designed some ways where the wealthy, they know how to insure their portfolio. Trust me, they know how to protect their portfolio. The CEO, I think it was JP Morgan about 2 weeks ago, said, we are going to be very conservative with our balance sheet. We're going to be very conservative with what we're doing. We're protecting it. We see, I believe he said, a whirlwind coming, which is a bit dramatic. We'll see what happens. But, CEO of a major investment bank, I think he probably knows something about what's happening, and they're going to be pretty conservative. They understand how to protect this stuff. Hey, Tradeway exists to help you guys know how to do the same. Why should only they know how to do it? Some of what we show you, it's very simple. You go straight into your brokerage account and you can do these kinds of things. So if you've lost 20, 30, 40, 50, 100,000, 150,000, depends on how big your account is, right? Just know that there are some strategies for you to be able to protect that. And I'm almost making an appeal to you tonight because I have, as I mentioned, met many people recently that feel sort of powerless. What do I do? I know my account's down and I don't want that. And we're looking at a situation where we've got to have some more wisdom in how to manage that and not be given back so much of those hard-earned money and those hard-earned, at least in time, right, returns that we've made in the stock market. Okay, so stock market here, where we go? Where do we go? How far down could this market go? Well, I think we're just getting started here, honestly. It depends. It depends on how long it lasts. If we continue to see inflation, increasing, we're going to continue to see the market responding to the rising interest rates. Okay, so Friday was a big deal. We did not see a retreat on inflation, and that'll continue to be a big thing. And oil and gas, those kinds of things are expected to just continue to go up. And if the Fed is more aggressive than they have been on Wednesday, this will be at 2:00 Central Standard Time, we'll see some volatility for sure in the market. So if you're trading actively this week, that's something you're going to want to be aware of. Make sure you understand, we're pretty deep into this down movement here. So I know some of you are waiting for a bit of a whipsaw, right, back to the top side. We'll probably see something like that before too long. I think Wednesday is really key to be patient about, but seeing that whipsaw in here could happen, get some short-term bounce. Just know that if things remain as negative as they are, and they very likely will, you're going to see Wall Street getting off that train pretty quick again. So we've got to be nimble. We've got to manage our risk. We've got to have a system. Tradeway.com. If you haven't taken that Step 1 Start Your Journey course, please come and join me. We'll spend a couple of days together. I'll teach you this system. And I think it's going to be just tremendous for you to know that, especially right now. And then that link in there for anybody who's interested in knowing more about that Amped program and what we do there to preserve and to promote, to protect. That's the goal. And that's what's going on. Tomorrow morning, we'll see. We'll see if we can hold on here, if it's going to go a little bit flat. But I expect some wild volatility here for the next little while. Appreciate you guys being on with me today. Market Monday, taking a look at the stock market, getting a little update in here we do from time to time. I will be back next week as always for Market Monday. You can always email me, support@tradeway.com. Just put Market Monday there. Any questions you got for me, suggestions, comments, anything at all, please send that in to me. They will pass that on to me. I see your comment there, Karen. Thank you as well. Appreciate you guys, and we will see you next week. Stay safe, protect your money out there, and let us know how we can help you. Click on that link. Good night.